Welcome to the deep dive, where we really try to cut through the noise and get right to the core of what's happening. Today, we're jumping into a question that's been sort of bubbling beneath the surface for a while now. How much longer can traditional finance and, well, the world of crypto really stay separate? Are we actually on the cusp of something big here, a real convergence?
It's definitely the big question, isn't it? And, recent events really suggest that the walls between these two worlds are getting thinner. The lines are blurring for sure, and that has some pretty major implications.
Absolutely. Which brings us to our main topic today. It's a really significant step, maybe even monumental, in the mainstream adoption of Ethereum. It could actually redefine how institutions, and maybe even all of us, look at digital assets. So for this deep dive, our mission is pretty clear. We're going to unpack the news about this Ethereum-focused firm going public. We'll dig into what it means for institutional adoption, for you investors out there, for the whole Web3 ecosystem, that next evolution of the internet built on blockchain. And ultimately, what can we learn from this? What are the key insights?
Yeah, this isn't just another small step forward. It feels more foundational. It signals a potential shift in how Ethereum specifically is seen and, maybe more importantly, integrated into like the traditional financial plumbing. It's really about building a proper bridge.
Okay, so let's get to the headline. We're talking about the Ether machine. They specialize in Ethereum Treasury management. And they've officially filed with the SEC to go public. They're doing it through a merger with Dynamix, which is already a listed company. Now, what's really striking here, and why we flagged it, is this is one of the very first firms focused specifically on Ethereum Treasury stuff to make this kind of move. It's not just any crypto company, right? It's laser-focused on ETH's utility. That focus plus going public, that's the interesting part.
Exactly. That laser focus is key. It really sets Ether Machine apart. We've seen exchanges go public, sure, or multi-asset funds. But this is different. It points to maybe a maturing market, a growing acceptance that Ethereum has specific uses, a unique value, maybe as a balance sheet asset even. It's making a statement that ETH is more than just, a quick trade.
Right. Okay, let's really unpack this then. Section 1, the groundbreaking announcement, what's happening and why it's unique. So, as we said, the main event. The Ether machine focusing on managing Ethereum-based treasuries is going public. This isn't just like some startup looking for quick cash. It feels strategic, long-term, integrating into the traditional finance world. And they're doing it via this merger with Dynamix, a public company, which means, crucially, filing with the SEC. Specifically, it's an S-4 merger statement they've filed. That's a pretty detailed document, terms, financials, all the material info the SEC needs for public companies. And for a crypto firm filing an S-4, well, it's not simple. You have to disclose how you acquire digital assets, how you value them, secure them, account for them. It gets complex fast with on-chain stuff. It forces a level of transparency that traditional finance is used to.
And the really unique angle here is that specific business model within crypto. Others have gone public, yeah, but Ether Machine is all about Ethereum treasury operations. Not an exchange making money on trades, not a fund holding lots of different coins. Their core business is managing Ethereum holding ETH, maybe staking it for yield, maybe other DeFi native strategies. That intense specialization, combined with going through the whole public offering process, it's a big deal for Ethereum itself, recognizing its potential beyond just being a platform.
And that transparency, that engagement with the system leads straight to the first big impact. A credibility boost, a huge one. For the whole crypto space, really, but especially Ethereum. When a crypto-native company successfully jumps through all the hoops of going public SEC filings, disclosures, audits, it adds a layer of legitimacy. For those big institutional investors, pension funds, endowments, asset managers, seeing that process, it reduces the perceived risk a lot. It signals, okay, this isn't just the Wild West anymore. It shows the sector can mature and play by established rules.
It's building trust, step by step. And connecting that to the bigger picture, this move really pushes Ethereum's role beyond just being like gas for the network. Historically, people saw ETH as fuel for transactions, or maybe just a speculative bet. But Ether Machine going public, it frames ETH as a legitimate long-term balance sheet asset for corporations. Think of it less like transaction fuel, more like a strategic reserve, maybe an inflation hedge, maybe a capital asset you can put to work for yield. It's like how companies manage cash or short-term bonds. We've seen research hinting at this institutional appeal, ETH's economics after the merge, staking yield. Ether Machine is basically real-world proof of that trend. They're putting their money where their mouth is.
The regulatory angle is also massive here. Absolutely huge. I mean, let's be honest, U.S. crypto regulations are still murky, fragmented, evolving constantly. So For Ether Machine to proactively file with the SEC, that's a strong signal.
It really is.
It shows confidence, a willingness to engage with oversight, even when it's tough, to voluntarily go through SEC scrutiny, which costs a lot, involves tons of disclosure, ongoing compliance. It implies they believe their operations are sound or can be made compliant.
Right.
That's a really positive sign for the whole industry. It suggests there's a path, a regulated path, for legitimate crypto businesses to integrate. Maybe it even helps pave the way for clearer rules down the line.
And maybe the most critical piece for traditional finance itself, this creates a new way to invest, a more accessible way. For so many traditional equity investors, institutions, even individuals directly buying and holding ETH, it's complicated. You've got custody issues, private key security nightmares, the regulatory uncertainty we just mentioned, plus the technical know-how needed. It's a high bar.
A very high bar.
Ether Machine going public lets these investors get indirect exposure to ETH, to the Ethereum ecosystem, without all that direct complexity and risk. You buy shares in a regulated company that manages the assets instead of managing the assets yourself. It's a vital bridge, an on-ramp for all that traditional capital that's interested in Web3 but has been stuck on the sidelines. It really democratizes access for institutions.
Yeah, it's about making it digestible, making it compliant for the mainstream. Okay, let's pivot now. Section 2. The ripple effect impact on investors, traders, and market strategy. So what does this news actually mean for someone already holding Ethereum, if that's you listening right now? Well, for existing ETH holders, this Ether Machine news is a really strong signal. It points towards institutional and corporate adoption. It goes beyond just retail hype or what DeFi folks are doing.
Definitely.
This isn't just individuals making choices. It's public companies making calculated, long-term strategic decisions to use ETH. It's concrete evidence of corporate trust in the asset's future, which should, you'd think, boost confidence for current holders. Adds a layer of institutional belief.
And that kind of validation really helps build a more stable, long-term view of ETH's value. When corporations start holding an asset, they usually aren't thinking about next week's price. They're looking years ahead at fundamentals, utility, sustained growth. This strategic shift helps move ETH away from being purely speculative. It starts looking more like a foundational asset, maybe like how gold is viewed in TradFi.
Interesting comparison.
It highlights that Ethereum isn't just tech, it's becoming a serious financial ecosystem capable of handling corporate money. Over time, that could change market dynamics, more focus on fundamentals, less on just retail buzz, potentially smoother price action, maybe stronger floors.
Okay, but let's switch gears to the traders. Short-term market focus. That's a different beast, right?
Completely.
While a long view might be stability, in the short term, news like this could absolutely spark excitement. Maybe significant price moves. We've seen it before in crypto, haven't we? A big TradFi name gets involved, or a major company announces something.
Right.
And retail investors, maybe even trading bots, often see it as purely bullish. Institutional validation. That can cause quick jumps in ETH's price, maybe even related tokens in the ecosystem, driven by that perceived validation and FOMO fear of missing out.
Traders will definitely be watching specific metrics now, trying to find an edge, like tracking the correlation. ETH price versus corporate treasury news. That becomes key. They'll look for patterns. Does ETH surge reliably after big corporate announcements about adoption like Bitcoin did back when Tesla or MicroStrategy first bought in big?
Right, trying to quantify the impact.
Exactly. Analyzing those immediate reactions, maybe even trying to anticipate announcements using news sentiment tools or watching on-chain flows that could become a bigger part of short-term strategy. This kind of news adds a whole new layer of institutional narrative to the usual market analysis.
And thinking a bit further out, this Ether Machine move, it could really shape future market strategy for the whole Web3 space. If they succeed, it sets a huge precedent. It could potentially open the floodgates, right?
That's the hope for many, yes.
You could see many more Ethereum-native firms, DeFi protocols, NFT platforms, maybe layer 2s, even DAOs thinking about going public via IPOs or SPACs. They could tap traditional capital to grow and sort of legitimize their operations in the mainstream economy.
And what's really crucial to grasp here is it's not just about the ETH token itself, it's about the whole ecosystem of digital assets and services built on Ethereum potentially getting public market access.
Good point.
Think about companies focused on specific DeFi lending protocols or liquid staking solutions, or maybe firms managing tokenized real-world assets like property or carbon credits on Ethereum. Ether Machine provides a kind of blueprint. If it works, these other specialized crypto businesses could follow, tapping into big pools of traditional money. That drastically diversifies the options for traditional equity investors. They could get exposure to the nuances of Ethereum through familiar, regulated stocks instead of needing to handle all the different tokens directly.
That's a really key point on diversification and access. Let's broaden out even more in Section 3. Broadening horizons Web3 and ecosystem implications. Okay, so the MicroStrategy comparison is pretty unavoidable here, isn't it?
It really is. They kind of wrote the first chapter.
Right. MicroStrategy famously went all in on Bitcoin for its corporate reserves, buying billions worth. It wasn't just an investment. It was this core strategic decision, BTC as a primary treasury asset, an inflation hedge, a growth driver. They showed it was possible for a public company to hold a lot of a digital asset. Ether Machine, you could argue, is basically the Ethereum version of that treasury innovation. MicroStrategy proved the concept with Bitcoin. Now, Ether Machine is applying that same idea, but specifically to Ethereum, highlighting its unique aspects.
And what's really interesting are those unique ETH characteristics. They might make it more attractive than Bitcoin for certain companies. Bitcoin is mostly seen as digital gold, right? A passive store of value.
You hold and hope.
Ethereum offers more. It's active. You can stake ETH to help secure the network and earn yield, something Bitcoin doesn't do natively. That's a productive use for treasury assets beyond just sitting there.
True.
Plus, Ethereum's DeFi ecosystem enables other yield strategies, liquid staking, providing liquidity. Things a corporate treasury looking for active management might find appealing. Now, these do come with risks, smart contract bugs and permanent loss, things a treasury needs to manage carefully.
Absolutely. Can't ignore the risks.
But for companies wanting more than just a passive hold, ETH's features could make it seem like a more dynamic, productive treasury asset.
So this isn't just about one company going public. It feels more like building a stronger, more permanent bridge between DeFi and TradFi. By going public, Ether Machine could enable much deeper integration between ETH treasury strategies and existing TradFi products. This isn't just theory. You could imagine new financial instruments popping up.
Like what, for example?
Well, maybe traditional asset managers offering structured products based on actively managed ETH treasuries, including staking yields. Or maybe traditional banks partnering with firms like Ether Machine to offer their high net worth clients regulated ways to get exposure to sophisticated Ethereum strategies that used to be only for crypto natives.
Which leads to the question, how does this help institutions practically? This bridge makes complex DeFi-like strategies accessible to traditional institutions that are currently blocked by regulations, operational hurdles, maybe even just reputational concerns about dealing directly with DeFi.
Right, the compliance departments might just say, no way.
Exactly. Many institutions have strict rules, complex custody needs, or regulations preventing direct protocol interaction. By investing in a public entity like Ether Machine, they get exposure through a familiar structure, regulated, audited, conventional. It lets them participate in DeFi innovation without totally rebuilding their own systems. It de-risks entry for that big institutional money.
And if Ether Machine's model works, if it's successful, it could set a huge corporate precedent, not just for ETH, but for the whole digital asset class.
A blueprint, essentially.
Yeah, a blueprint for how other firms managing different kinds of digital assets can get public market access and legitimacy in the traditional finance world. That blueprint would probably cover things like standardized accounting for digital assets, robust security for custody, clear regulatory reporting.
For sure. And the potential implications are pretty wide. We can definitely speculate on what might come next. Imagine firms that specialize in managing large stablecoin reserves, USDC, USDT, not just for payments, but as stable treasury assets.
Interesting.
Or companies focused on real-world assets, RWAs, tokenized real estate, art, carbon credits on-chain. If they can show a viable, compliant treasury model like Ether Machine, maybe they go public too, offering investors stock market exposure to tokenized assets.
Wow, okay.
Even Layer 2 treasuries, managing assets specific to scaling solutions on Ethereum, could follow this path eventually. It opens up so many new ways for institutions to engage with Web3, bringing diverse parts of the crypto economy into the public view, massively expanding what people can invest in.
It really could be a cascade. Okay, let's ground this a bit. Section 4. Learning from history supporting stories and case studies. We have some good examples to put this in context. All right, let's start with the big one. MicroStrategy's Bitcoin play. Most people probably remember this. Michael Saylor and MicroStrategy starting in 2020, making headlines by adopting Bitcoin as their main treasury asset. billions worth.
Unprecedented at the time.
Totally. They saw it as better than cash long-term, an inflation hedge, a growth asset. It was groundbreaking. It validated the idea that a public company could hold huge amounts of crypto and sparked a massive debate about corporate treasury management.
And connecting that back to Ether Machine, there are definitely lessons there. Ether Machine can learn a lot by watching MicroStrategy's journey, how the market reacted, how they positioned themselves. MicroStrategy stock often tracked Bitcoin's price closely, right? And they faced both huge praise and sharp criticism. Lots of investor education needed.
Constantly explaining their strategy.
Exactly. So Ether Machine will need to be really clear about their ETH strategy, manage expectations about ETH versus Bitcoin, and maybe proactively educate the market on ETH's unique benefits and risk staking, DeFi, etc. Which leads to a good question for you listening. Do you think ETH strategies can really match MicroStrategy's Bitcoin success, given ETH is different? Or is ETH maybe too risky for corporate balance sheets with its extra complexities? That's a core question for any CFO looking at this.
Then there was Coinbase's IPO in 2021. That was massive.
Huge moment.
First major crypto exchange going public via direct listing on the NASDAQ. It wasn't just about Coinbase itself. It gave traditional investors a way to buy equity in the crypto infrastructure. Invest in the picks and shovels without buying the gold directly. It was huge for mainstream recognition, showing crypto businesses could scale and meet public market standards.
Now, contrasting Coinbase with Ether Machine is really insightful. Coinbase is an exchange, right? Market infrastructure for trading and custody of many assets.
A supermarket of crypto.
Kind of, yeah. Ether Machine, though, is a treasury management firm for one specific asset, Ethereum. It highlights a different, more specialized part of crypto entering public markets. Coinbase gave broad exposure to crypto services. Ether Machine offers targeted exposure to the strategic management of Ethereum as a corporate asset. It's more nuanced, more focused on integrating asset management into TradFi beyond just trading.
Okay, and what about Grayscale's trusts, GBTC, Ether?
Right, those were really important early on.
They were some of the first ways for institutions and accredited investors to get exposure to Bitcoin and Ethereum through the stock market, albeit indirectly.
You bought shares in a trust that held the crypto. It was regulated, but often traded at a big premium, right?
Yeah, the infamous Grayscale premium, or sometimes discount. It offered access, but it wasn't perfect.
And that shows an evolution in access, doesn't it? Grayscale's trusts were basically passive holding tanks. Buy a share, own a fraction of the crypto, pay fees. They often had lockups, traded away from their actual asset value, no easy redemption for the underlying crypto for a long time.
Right.
Ether Machine, though, is a publicly traded management firm. Investors aren't just getting passive exposure. They're investing in a company actively managing its Ethereum treasury, potentially staking, generating yield. It's a shift from passive trusts to active management firms going public. It signifies market maturation, offering a more sophisticated, potentially dynamic way for equity investors to get involved.
Galaxy Digital is another interesting one here.
Yeah, definitely a pioneer.
Publicly traded crypto investment firm, founded by Mike Novogratz. They've actively tried to bridge TradFi and DeFi, offering asset management, trading, advisory for institutions. They operate kind of like a traditional merchant bank, but all focused on digital assets. Really helped institutionalize the space.
And comparing them to Ether Machine. Similarities in the mission bridging the two worlds, offering institutional solutions, but the key difference is scope. Galaxy is broad. They cover lots of digital assets, blockchain companies, TradFi services adapted for crypto.
Wide net.
Exactly. Ether Machine is laser-focused, just on Ethereum treasury management. That specialization lets them potentially build deeper expertise, more tailored strategies within the complex ETH ecosystem. It presents a different investment case than a broader crypto financial services firm, depth versus breadth.
And we absolutely have to mention Tesla's Bitcoin purchase in 2021.
Can't forget that one.
A huge mainstream company, Tesla, announces they bought $1.5 billion in Bitcoin for their treasury. It sent shockwaves everywhere, not just the amount, but who was doing it. A forward-thinking tech giant. It legitimized corporate Bitcoin holdings almost instantly.
And that move, along with MicroStrategy's buying, just fundamentally validated the whole concept of crypto as a corporate treasury asset. These highly visible companies normalized the idea. It forced CFOs everywhere to at least think about it.
Put it on the agenda.
Precisely. And that paved the way for firms like Ether Machine to focus specifically on Ethereum as a viable treasury asset, building on the Bitcoin precedent. It showed it wasn't just a niche strategy anymore. It accelerated the conversation from if corporations should hold crypto to how they might do it, setting the stage for more specialized approaches like Ether Machines.
Okay, so that's the history, the context. Let's shift to Section 5. Data points and analysis, what to monitor next. How do we actually track this story and measure what's happening? Well, first off, for anyone watching the markets, tracking ETH price reactions to corporate news is going to be key. And we need to be specific. How does ETH react to news about institutional adoption for Treasury or product integrations or big investments?
Not just general market noise.
Exactly. Differentiating between short-term speculative pumps versus maybe more sustained, fundamental shifts in price driven by these corporate actions.
And we have historical context for this. Tesla's 2021 Bitcoin buy, it definitely moved the price significantly. If we see a similar pattern with ETH after Ether Machine goes public, or if other corporations announce ETH treasury plans, that would be a strong signal about institutional sentiment and its market impact.
What would traders look for?
Traders and investors will look for sustained momentum or maybe increased price stability after such news. Is it just a quick spike, or does it mark a new level of demand? Tools tracking news sentiment and large on-chain ETH movements will become even more important for monitoring this.
Another absolutely critical metric, Ethereum staking data.
Oh, definitely.
Specifically, how much ETH is locked in staking compared to the circulating supply. That tells you a lot about network health, commitment from holders, and it affects supply dynamics for ETH as a potential treasury asset.
Right. More staked ETH means less available to trade, which could theoretically reduce volatility, impact liquidity. It involves individuals, but increasingly institutions, too.
And that brings up the impact of corporate treasuries actually staking their ETH.
Yeah, that's a fascinating angle. If companies like Ether Machine or others that follow stake large amounts of their treasury ETH, that adds another layer to ETH's utility and the supply-demand picture. Corporate staking could be a big incentive for long-term holding, reinforcing ETH as a productive, yield-generating asset, not just something volatile.
Makes it look less like speculation, more like participation.
Exactly. Active participation in the network's security and economy. That could make ETH much more appealing to other institutions looking for yield. Of course, they have to manage risks, slashing penalties, the lockup periods, but the potential yield might be worth it for well-managed treasuries.
We should also keep comparing corporate Bitcoin versus Ethereum holdings, like an ongoing analysis. MicroStrategy's BTC strategy versus Ether Machine's ETH strategy. What are the different reasons behind these choices?
Yeah, that comparison helps understand the motivations. Why BTC? Why ETH? Is it Bitcoin's digital gold narrative, its simplicity appealing to a certain risk profile? Or is it Ethereum's programmability, its DeFi potential, staking yield, attracting firms wanting more active management?
Different tools for different jobs, potentially.
Potentially. These different value props will likely attract different companies based on their business, their risk tolerance, their goals. Understanding these choices gives us deeper insight into how institutions are thinking about digital assets overall. A tech firm might lean ETH, a traditional manufacturer might prefer BTC's simplicity.
And here's something fascinating for traditional investors. Comparing the performance of the public equity versus the underlying token.
Ah, the correlation study. Yes.
We need to analyze how stocks like Coinbase, Galaxy, maybe Ether Machine correlate with BTC and ETH prices. Do they move together or do they diverge?
That's absolutely critical for investor insight. Does the stock market accurately track the crypto market? Or does the stock offer a different risk-reward profile?
Right. Does ETH dropping always mean Ether Machine stock drops by the same amount?
Or do equity investors price in things differently? Maybe regulatory risk, maybe broader market sentiment, offering a potentially smoother, though maybe less explosive, ride.
Understanding that is key. If you're thinking about getting crypto exposure through stocks, are you getting indirect token exposure or something else entirely?
Which brings us back to a question for you, the listener. Would you rather buy stock in an ETH treasury company like Ether Machine, or just hold ETH directly? Why? Your answer probably says a lot about your risk tolerance and how you view direct versus indirect exposure.
And finally, we absolutely need to watch institutional flows into ETH more broadly. Tracking ETH ETF inflows, fund flows, alongside corporate treasury news. Get the whole picture.
Exactly. That gives you the holistic view of institutional engagement. Watching those ETF and fund flows, like from CoinShares reports, shows general institutional interest through regulated products, Combine that with specific corporate news like Ether machines move, and you see the full picture. Are funds and corporations moving in tandem? Or are their strategies diverging? It helps gauge the overall institutional appetite for Ethereum, showing where the smart money is flowing and how fast TradFi is really adopting the asset.
Okay, so let's wrap up this deep dive. The Ether machine going public via this merger. It's clearly more than just another deal. It feels like a really significant moment for Ethereum. It boosts its credibility in traditional finance, opens up new investment routes, and definitely sets a precedent for the wider Web3 world, moving more mainstream.
Absolutely. We've dug into how this solidifies ETH as a potential balance sheet asset, how it builds that crucial bridge between TradFi and DeFi, and importantly, how it might open the door for more specialized crypto firms to follow them into the public markets. It really feels like a moment where the future of finance is being actively shaped, blending the old and the new.
And that leaves us with maybe a final provocative thought for you to chew on after this discussion. Does a move like Ether machine going public, making crypto more accessible to traditional players, ultimately help bring crypto to the masses? Or does this increasing integration with centralized regulated systems risk watering down the decentralized ethos that makes Web3 so unique, so potentially revolutionary?
That's the core tension, isn't it?
Yeah, it really is. What are the implications of that tension for the future of decentralized finance as it gets closer to these established systems? It's something we'll definitely keep watching.